Hey traders, this is Ron Haidt at Market Tamer. Happy Tuesday. Hope you had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Qs. They were up a whopping 58 cents today. We hit the 5-day EMA in blue. You can see it. We were rejected. The trend here is still down. Qs are definitely in very cautious territory right now on the daily charts. They are not bullish on the daily charts. The trend line's been broken. We're below the 50-day in orange. Also, volume had picked up here. So just before this can be bullish, if you're a bull, I would want to get it back above the 50-day and the 20-day EMA in red. 50-day in orange, 20-day in red. That's what would need to happen. Then it can go back to being very short-term bullish. But to re-energize the charts, we really need new all-time highs again. So just keep that in mind on QQQ. All right, SPY, which I have a bullish position in, it was down 42 cents today. We bounced off the 5-day EMA in blue and also bounced off the 50-day SMA in orange. We finished right between them. So the S&P is playing ping pong right now between those moving averages. If the orange line fails to hold the support, potentially down here near 278 to 280, but really the 200-day moving average in purple would be the next downside target. If we do the diamonds, the DIA, hit the 5-day EMA in blue, was rejected, was actually below the red line today, but then finished back above it. It's clinging to that 20-day EMA. So as long as the Dow is above it, what that means is the 20-day outlook would remain bullish. That's going out 1 month in time since there's about 20 trading days in the month. If the red line falls, 50-day SMA in orange would be the target. The IWM, the Russell 2000, continues to play with its 200-day moving average, so it's pretty much reached its downside target as of right now. Taking a look at some others, how about the IYT, which are your transports? Volume was light today, only 218,000. I would say, big volume would be something near 500,000. It certainly was not there. We did close near the lows today on light volume. Target would be the 200-day moving average in purple, which is also pretty much where we stopped back in June and also May. Alibaba was in the news. They're at new 52-week lows. If I go back here and bring in a 5-year chart of Alibaba, each candle is now 1 week. You can see how we blew through some support back up in the 165 area. There's a long ways down potentially before some support happens. Let's try this again. If I change this to maybe a 2-year chart, there's a little bit of it. There is a gap here and a little bit of a pause in June of 2017. That's 130, 133 up into maybe 144. It's getting sort of close to support, but a gap fill would take it down to 125. Given the fact that we've broken down to new near-term lows, if I was holding Alibaba stock, I'd want a long put right now because this company cannot get above the 50-day. It did for 1 day and then right below, right? But it can't stay above it. So before this stock, in my opinion, could be viewed technically bullish, we would need to get back above the 50-day, and that's a lot of work right now. So Alibaba is definitely looking down and lower at this stage. Papa John's Pizza had a big day, and it's been below its 200-day since, all the way back in August a year ago. The stock popped 8.89%, did clear the 200-day, and we closed near the highs of the day, which pretty much eclipses some of these other highs. From a purely technical standpoint, this consolidation just around 60-ish, and then up there around 65 would be the upside targets right now on PZZA. UGP, not a stock you're going to hear about every day. This is ultra par, and we're going to leave that last part off. We'll just call it ultra par. South American stock, this has been 25 down below 10. But look what's happened. It's stayed pretty much below the 50-day the entire time. Now we've popped up on back-to-back above average volume days, but it's not astronomical volume days. Needless to say, we're already up at these previous highs. For an upside target, the 200-day, that's all the way up at 16. That's still a 50% potential rise from a technical perspective. If I wanted to try to play this one bullish, I might consider either an 8-day EMA as a trailing stop or go with a 20-day. But with it gapping all over the place, theoretical stops, for example, you might say, well, the 20 days at $10 right now. So if it gets below that, I might lose $1.72 or so. Yeah, but what if it gaps much lower than that? What I would consider here is something, whatever money is spent can truly be lost. That's always the case, right? When you buy stock, it could always go to zero. But then you say, theoretically, if it gets down below a stop, this is where you're roughly looking at for a stop. And this one, who knows what can happen, but it is breaking out to the upside, so I just wanted to highlight it. Could be a fun paper trade. How about a stock that got whacked today? PPG Industries, down 10%, and it took out the previous lows at 100, which was sort of like a triple or quad bottom. You had some support here from March a year ago, August a year ago, and then May, June, and this July. Next support, that brown line just under 95, maybe about 93 bucks. And CE got crushed, Celanese. This was down 6%, blew through the 200-day moving average, target 95 bucks. That's still $7 lower. So you're looking at 7% or so before it finds some support. There is an earnings report due out on 10/18, which is about 9 days away. I did have a question on crude and Conoco. Let's first go to Conoco. Conoco is up 1.43%. It's had a nice little rally here. It's pulled back, somewhat lighter volume. And what that means is the black bars, which are up days, are higher than the red bars, which are down days. So the blacks are beating the reds. That's a sign the bulls are in control. And now we're popping up a little bit. This can still look like a bull flag. There's the flagpole. Here's the flag. I would want to take out October 1st closing high of 79.89. Let's say 80 bucks. If we get above 80, that's a breakout. And if I were to look at Conoco over at financial.com, what we can see here is the stock basically goes nowhere for the next couple months. Nowhere fast. So there's no major seasonal bias over the next 12 weeks. The stock goes up 2.9%, 58% of the time. It's not exactly not going to cover off the ball. Now, there are stocks that do rip into year end, and I've been having special events on those. You guys should have attended because you now know the hottest stocks for year end. But for Conoco, no major seasonal bias. And in fact, if I push this back up and I take it out 26 weeks, you can see that it really doesn't have a major bias just yet. But technically on the chart, it's looking okay. Then the last question was on crude. So here is all the data I could pull in on /CL. Each candle represents a month. And if you look back here, which is 2015, that could be the left shoulder. The head is 2016. The right shoulder is 2017, about a year and a half ago. Now we're up here. The next resistance level you can argue is, I mean, there's a little bit of overhead supply here, but 90 to 100, 90 to 110 would be the target. That's on a monthly basis. Doesn't say it's going to get there, but that would be the target right now. So crude is bullish on the monthly chart. If I come in here and do a 3-year weekly chart's pointing up. And then if I come in and do a 1-year daily, it's also pointing up. Now on the daily, we've pulled back. We're testing the previous high. That's all good, and today we bounced. So if I wanted to try to be bullish on CL, I could literally put a stop below yesterday's close or today's open, or even today's intraday low. There's always little ways that you can wiggle it. Again, good practice trade idea. If we close below yesterday, which was the 8th, its close, or today's intraday low, either one, then this short-term bullish trade idea would be over, in my opinion. So practice on paper, there's no risk because it's fake money. So I hope you find that helpful, gang, and I wish you guys a fantastic rest of the week. I'll see you in the next video. Take care.